Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show, I have an Army veteran, served as an officer in the 4th Infantry Division, and today a lender with Premier Lending, and host of the Between Two Doors podcast based out of Pensacola, Florida, by way of Texas, Nate Carver. Nate, welcome to the show.
Hey, Dylan. Thank you for having me on your show. I appreciate it.
Absolutely. It's great to have you. I always like to start off at the top by asking folks how they got into the real estate space.
Yeah, it's never something you start off with as a goal for life. And I was Uber driving, and literally my last passenger was a mortgage broker or banker. He owned a mortgage branch back during the refi boom, and we were just talking. It was a very long ride, and he said, "Hey, why don't you come? Why don't you go get your license and come work with me?" And I quickly learned how to spell mortgage, and went and I've been doing it like almost a little over 5.5 years now, and it's been a fantastic journey.
You know, I had a similar story about getting into my real estate license. I was wholesaling, and someone said to me, well, you know, you'd have more credibility if you became a real estate agent. So I said, yeah, I mean, how much can it be? So I looked it up. It was like X amount. I want to say it was like $500 to take the test. But little did I know that it's really like $3,500 to become a real estate agent, because you got to go to school, and then you got to take the test, and then it's this, and then it's this, and then broker fees, and then MLS fees. And the next thing you know, you wake up and you're $3,500 deep, and you're like, well, now I got to sell some houses. And I know for the loan originator, RMLO, it's a similar thing. How intensive was it to become a loan officer?
So I thought the course it's reading intensive. There's a lot of manuals, and of course that stuff changes from one administration to the next, one Congress to the next, and even at the state level, right? So that all that stuff is constantly changing. So as a lender, you're having to renew your license every year. It's like 20 hours. That's not that big of a deal. The thing I found interesting was they really played on your attention to detail on the test, because they would do triple negatives, like, you know,
I do know.
Not run across the street. Okay, does that mean run across the street or not run
I'm
across the
running.
street, right? And so,
Yeah.
and so they did that a lot on a lot of and that that weeded out a lot of people, to be able the inability to catch that. So
You know, for
that
me,
was
Nate,
it.
when I the test was so I have mixed reviews of this, but I stand by this. The Texas real estate exam is so hard that anybody who passes that, even if you don't sell any homes, I have more respect for you. Because as a wholesaler now, but specifically as someone who used to not have a real estate license, I kind of thought like all these people have real estate license in Texas. I don't know how many homes you're selling. How hard could it be? Turns out it's quite hard. You have to understand mineral rights. You have to understand, farm and ranch. You have to understand everything else about contract law. The contract is like 12 pages long. By the way, learn everything about the contract law, but you're not an attorney, so you can't use it. And then Texas specifically, exam is so different from the other exams that I've had brokers.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
From New York, from other states, who've told me that they took the Texas exam and they didn't pass. So, I now have more respect for people who take those exams. But walk me through, what was the first, 6 months and the first year like in the lending space once you got licensed?
So I was really lucky. I in part, I got in during the refi boom, where for the first year I wrote refinance loans every day, all year long, and I never did any purchasing. So on one hand, I was doing really great. On the other hand, I had a lot to learn, and I didn't know I needed to learn.
Right.
Because the market demands were, I'd wake up, I'd start writing refinance loans, and by the time I clocked out at 6, 7 o'clock at night, I didn't have any room left, no more bandwidth to go do anything else but, go back to sleep. So, um, that all changed, right, when the refi boom disappeared, and a lot of lenders got out of the business. I was one of those lenders that fell in love with what they were doing, was like, I'm going to figure out how to stay in this space. I've got some coaching and got and just partnered up with a lot of really great people in the industry that are trustworthy and knowledgeable and willing to point me in the right direction and answer questions. And so I that was very fortunate. Probably, I would say the best decision I ever made was getting some coaching in the industry. It still pays off to this day. And I did this transition. It took me about 9 months to get out of that, or to create a business out of nothing.
Yeah.
And then from there, it's just been, okay, well, what new tools can I apply to my business? What design conversations to have, and what value adds do I bring to the table when I'm working with realtors or investors or attorneys or financial advisors. There's a whole list of people that you can be a real partner with in the lending space. And then ultimately, how do you best take care of the client, the person that's actually buying a house or even selling a house? I've got some tools there that I help
You know,
implement with
when I
realtors.
think about the lending space in general, I've had so many lenders on the show here, all different types of backgrounds, you know, teachers, military, people who've gone from
Yeah.
never thinking about real estate to buying a home and dealing with a lender and then thinking about like, hey, I could do this. I saw this person, I could do it. And one of the things that struck me is, and specifically now that I'm a licensed realtor, the lending portion is the most important part because you don't get the house without the loan. So when things are going great, things are going great. I mean, I've talked to
Right.
people who got in before the crash in '07, '08, and they were like, yeah, everyone had money. But then when things take a downturn, and I've talked to people about like post Dodd-Frank and what happened and so on and so forth,
Yeah.
things are way trickier. And then also you see like an attrition, you see a thinning of the ranks, you see a lot of lenders maybe go, fortunately, doing something other than lending because things are harder, right? Whereas I've
Yeah.
seen with real estate investors, I've seen it right now. I'm in DFW. We were talking about how you're from outside near McKinney, I believe, or Abilene, right?
McKinney,
And
yeah.
uh, the trend that I've seen is a lot of people who are going from fix and flip to new build, or people who maybe have. I've seen it this way too. People who are on the investment side and they can't do Airbnb any longer, so they might do corporate housing or long term. And so they have that ability to pivot. But with lending, it's a little bit trickier. It's a little bit trickier because it's not like you can just invent products out of thin air. Although we are seeing, new products all the time, like DSCR, for instance.
Yeah. Yeah, well, just to add another layer to that, the current administration is looking at doing a couple of things. The CFPB may be going away, maybe. Certainly has been defunded. And then you've got what they're calling the Big Beautiful Bill. There's a lot of changes in that just got approved. Um,
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
and then there's a push to move Freddie Mae and Freddie Mac out of conservatorship.
I've
What all
seen
that
that.
means is that there's a lot of opportunity coming, a lot. And so if you're an investor, well, if you're looking to buy a home, period, there's going to be a lot of opportunity. And so as looking for a lender partner, I look at it like this, the real estate, buying real estate, that's fun and sexy, whether it's your first time home buyer or you're buying an investment property, but the lending part, the paper and documents, if you get that piece down right, it's going to save you tens of thousands of dollars, um, in the short term and in the long term. So, um, partnering with a great lender is a key piece. Um, and then that lender staying on top of his craft, and
Yeah.
being aware of what's out there. As a lender, I network, and so the I got 167 different investors, different products. Each investor has their own specific, unique um, requirement, and that's you know you get away from Fannie Mae. The further away you get away from Fannie Mae and Freddie Mac, you get a lot more um, liberties on what you can and can't do.
Sure.
And so, especially with the DSCR, it's a fantastic product that's fairly new again on the market, but things kind of come and go. They fall out
Yeah.
of favor because of the market pressures or what have you, and then they come back, and then you've got lenders that are ready to work on that or apply those loans and know how to do those. Um, is a fantastic loan, especially if they're done in-house. So I think it'd be a really fantastic loan for a borrower. Yeah.
Nate, I want to pivot a bit here. And first, I want to ask you about in-house lending. So almost, I would say, not all, but almost all of the lenders that I talk with are brokering the loans, but they're not lending on it themselves. And I think a lot of people may not even be aware that this is happening.
Yeah. So the more complex, so here's how they move money around the country, right? So you do an FHA conventional VA loan. That lender that structures that loan is going to sell that to a big box bank, and that's how they move money around the country, and that's how we keep from having credit crisis. So when you look at unique proper loans like a DSCR, those investors or those lenders are looking to offload that loan product to somewhere else, whether it's a warehouse loan, there's some other ways of doing that. And so that when they do that, that means they're not going to write the loan. They may take a loan application but they're not going to write and get all the documents. They're going to basically sell up front this loan to somebody else. There's no transaction, but they're putting the loan to another lender that is equipped to write that loan and fund it. And when they do that, they're brokering the loan to somebody else. There's points associated with that, and
Right.
either those points will be baked into the loan, or they'll be added to the loan, and it'll be a line item on your closing disclosures. Um, if you have someone that's writing the DSCRs and others types of loans in house, there's no points.
You're
No
saving money.
points than if you were buying down the interest rate, which is always an option on any loan. But you don't have, yeah. So you end up being able to, as an investor, I have seen, I've seen not the points for the interest rate. I've seen the points for the transaction be as little as a point and a half. I've seen it go over three, in on loan estimates that have been brought to me, and that's something to be aware of. Um,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I've seen all kinds of stuff because it's not RESPA. Generally you don't have to deal with RESPA compliance, and so
Now,
there's
are points one interest rate percentage, or is it something entirely different?
something entirely indifferent. So a point. Oh, how do we not get in the weeds on this one? So basically, the lender decides how much how what. So let's say they look at their interest rate in eighths of a full interest rate point. So from six to six and an eighth, they may charge, pull a number, $1,000, to go from six and an eighth to do a buy down of the interest rate to a six. Okay. That's not a full point. A full point would be one interest rate. And it's not really, I mean, I guess you could figure out an equation of, how much would it cost to go one whole interest rate lower. And if you were doing a buy down, but rarely see that. I won't say I'd never see that. Usually we're talking about bringing down an interest rate about a quarter point, half point,
Right.
usually. And that's not quite there. It's not going to be a full point buy down, like a full interest rate buy down to get to that.
I wanna pivot a bit here, Nate. Our rooster's going
Okay,
off in the background here,
I hear
and ask
that.
and ask you about the regionality of lending versus being able to lend across state lines. I think a lot of the lenders that I talk with are lending all over the country, but as an agent and as someone who works a lot with wholesalers, I also think that there's a lot of understated, not emphasized value in being a regional lender who has a strong presence in a specific area with market knowledge of that area as well. I don't often hear people talk about that, but I'm curious to get your perspective. I mean, you're out there in Florida now, but I know you've got the Texas background as well.
Yeah. So I hear, okay, there's pros and cons to all of that, and I'd say the old school lending was you lent in like a 60-mile radius of where you lived. Pre-COVID, post-COVID, everything changed, and the lenders. A good example, I'll just use myself. I'm licensed in 5 different states. And in those 5 different states, I really focus in geographical areas. Florida, for example, where I'm at now, I focus in Northwest Florida, in Central and South Florida. Um, Texas, I focus in North Texas. I know the areas because I
Sure.
talk to my real estate agent partners. I know what they're hearing or what they're experiencing. Is it anecdotal? Maybe. Um, I don't control what the markets do, but I do know my product, and I can, how to manipulate the product to help get someone into owning that property. Um, so that's where I defer from doing it the old way of being. But I want to be known as the mortgage mayor of my area.
Yeah.
Uh, I want to be the guy that people think about when they're thinking about mortgages in my area,
Sure.
and I am. But what's my area? Um, it's a bigger pie. As long as you have access to information, you can pretty well define your own area, I think. Um, and
Mortgage
and when
mayor. That is that trademarked? Someone's got to trademark that.
somebody needs to trademark that. I heard that. I think I heard that from Steve Kiles. He's in the lending space
That
in
is phenomenal.
Florida.
Mortgage mayor. I don't know if you can get any better than that. Nate, we actually are coming up on time here. Where can folks go if they want to learn more about Premier Lending or if they want to reach out to you?
Yeah, if you've got questions and want to explore investing or buying a home, or options when it comes to real estate and making your dollar go further, natecarver.com, Natecarver. Is my website. All my links are right there. Social media links are all right there. My phone number, 972-832-5761. You're certainly welcome to call or text me, and I will help build you a clear mortgage plan, whether you're buying your first time home or you're looking to refinance and or buy other properties. I've walked the walk and talked the talk. I've done investing myself, single family to multifamily, and it's a wonderful way to accumulate wealth.
Nate, thank you so much for coming on the show here today.
Yeah, absolutely. Thanks, Dylan.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.